Alright, you guys, so in 5 minutes or less, I'm going to try to explain the next Black Swan event for the traditional markets and why Bitcoin could see anywhere from 6 to 3,000 over the upcoming year. This is not stuff that normal people look into as far as crypto traders, but understanding markets and knowing that the SPY, so what moves the SPY, is kind of the theme. Okay, so you have to understand a few things. One is a GSIB. A GSIB is a globally systemic important bank. Okay, in Europe, there is, of these GSIBs, there's a list right here. This is not a big deal. You can go Google it, right? So these are the globally systemic banks, meaning that if they default or have issues, it could cause a global collapse. Okay, so we go over to the spread, the difference between a 10-year Germany bond and a Italian bond issued by those governments. They both use the euro, okay? And so just like we use US dollars, there's different states, Texas, doesn't matter where you go. In our country, you're going to use dollars. The same thing, Germany, they use euros. Italy use euros, okay? And then their government, like our government, can issue bonds. Now, there's the definition of a bond if you don't know. The spread value is the difference between the risk. A key concept here is these numbers, because they're both using euros, should be very similar in value, okay? And so the spread is the difference. And so what we have here is the spread between the government 10-year treasury in Germany and the spread and the Italian bond is 2.16 basis points, which is about 2.25 or 2.16%, you could say, or 2.25%, you could say, just to keep it easy. Okay, so the risk, how much risk, is indicated by the percentage difference, right? So what the market's telling you is there's a very big discrepancy between the risk of holding an Italian bond. There's more risk holding an Italian bond than there is holding a German bond, but they're both using the euro, okay? So if one of these systemic banks, this idea is not difficult, but it takes a little bit of understanding. So you have the GSIBs, these banks that hold so many assets, let's just say, to keep it simple, that if they can't pay out on their debts, or they take on too much leverage, too much credit risk, and other people can't pay their debts to them, they can default or need to be bailed out. This is the case in Italy, okay? And so what you need to look at is what happens if, as is currently happening right now, some European, one of these banks, or the euro has trouble. Now, you can come and any number of things can happen, and governments can step in and bail Italy out. That's a probability. However, at this time, what you have is a different systemic risk, which no one's really talking about and putting these ideas together like I'm trying to do for you. In Europe, there is the inflation like we have here, but also rising energy costs, unlike we're having here. If you think you've got it bad here, if you were in Europe, it's far worse. Their energy comes from Russia. If Russia doesn't supply them the natural gas, then their costs spike. In Europe, it's very cold in the wintertime. So as the winter sets in, with the rising cost in energy, the consumer, the average person in Europe, gets decimated. They get crushed under the weight of that. Okay? So while that's taking place, you have the exposure on the macro scale of Italy and Germany and these banks that can run into big trouble as they have issued bonds or mismanaged money. We're talking about entire countries, so it's too large to get into detail. But just there's many macro things that could happen to cause a default in one of these banks. So now this is the key point. If you followed this far and you understand that much, now if that happens, a default of a major bank and or the energy squeeze, which is now in Russia's control, if that happens, that would actually be good for the US dollar. The US dollar would increase. We would see the run up. So that's where, Bitcoin doesn't like that. This is why it's important to you to understand these concepts. Bitcoin doesn't like it when the dollar runs up. So if this scenario plays out, what you have is the dollar running up, Europe's in collapse, Bitcoin is in collapse. Now check this out. This is why it's a black swan event. So as the dollar runs up and we come into October and November with the earnings for US companies who do business globally, and for example, Netflix, who does business globally, their customers in Europe pay in euros, okay? But now that euro is devalued and they have to pay in US dollars. They have to bring that currency over here and convert it to US dollars. So they're actually losing on these services because the euro is devalued, even though the dollar has strengthened. So while that's all playing out, the majority, Apple, all your big tech companies, if they have more than 50% exposure to overseas business, then what's very possible is as the energy crisis continues in Europe, as the exposure from these GSIBs, these banks, take on more and more risk, and as Europe needs to raise rates, just like it's happening here, it puts a systemic pressure on the entire banking system in Europe. One of those banks collapses. People flood into the dollar, which seems good on the surface, bad for Bitcoin, we know that, seems good on the surface, but because our companies in the US have exposure to the euro because they need to be paid in dollars and that has to be converted, then our market suddenly feels the compression and squeeze around earnings time, October, November. Okay? None of this is conjecture. This is all math. This is all basic macroeconomics. And so if you can see that, that's why I'm pointing towards this direction of basically how do you hold a longer position on a short ETF, or how do you manage this? Timing this is not going to be the simplest thing, but how do you build a position so that when, not if, but when the euro has a collapse, either due to Russia not supplying gas or one of these banks defaulting, which then ripples over into the US, those earnings reports come out, it could be that catalyst, boom, the market collapses. Timing that's going to be very difficult. You're going to wake up one day and go, I wish I had done this. So anyway, that is a very real potential black swan event that could be taking place October, November this year. And so it's something to pay attention to.